What's good, Canopy Growth traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Hope you're having a great weekend so far. Today's Saturday, it's February 11th, and in today's video, we're going to be going over Canopy Growth's recent earnings. I'm going to give my thoughts and opinions on it. We'll look at the numbers. They had a big miss in terms of revenue and EPS. I'm sure most of you are already aware, but I wanted to dive into some key points that I did notice from that. But before we get to it, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, and you'll be notified on any future videos or when I go live. As I mentioned, I'm going to be going over the earnings. We'll go through this as quickly as possible, but there was some key talking points from that I want to go over. One was the beverages. So they're going to be switching to a third-party sourcing model, and I'll talk about what that could potentially mean. They also cut 800 jobs, and they're closing the Flagship facility, and all of this comes after cost-cutting initiatives and downsizing, things like that, trying to achieve growth and profitability, right? Obviously not just Canopy, but many other companies in the space are experiencing the same thing, especially in Canada. Just over planning for capacity, and we're expecting the US to be legal by now, and that's just really put a wrench in things, right? So we'll move into this pretty quickly here. So as I mentioned, they missed on the revenue. So we were expecting 116.93 million Canadian, and it came in at 101.2 million. Big miss there. EPS, so earnings per share, negative 0.2211 was the forecast, and it came in at negative 0.54. Another huge miss. And then we'll go over this, like I said, just quickly. I know most people probably already read this, but their Q3 revenue declines 4% sequentially to 84.8 million. That's not factoring in all of their different lines of the business. So they have stores in Bickle, right? They have BioSteel as well. We'll go through this quickly. This is all represented in Canadian dollars unless otherwise stated. Company takes firm action to transform Canadian business to enable growth and profitability, announces cost reduction program for additional 140 to 160 million to be realized over the next year, and restructuring includes significant reduction in production footprint and headcount. So they're making significant changes to the Canadian business. So Canopy Growth right here highlights announced today that is transitioning to an asset-light model in Canada by exiting the MJ flower cultivation in the company's Smith Falls, Ontario facility, ceasing the sourcing of MJ flower from Mirabel, Quebec facility, and moving to a third-party sourcing model for MJ beverages, edibles, vapes, and extracts. So we're going to take a look at what potentially could come of that. Today's changes come in addition to the multiple cost reduction activities from fiscal year 2023, including the divestiture of Canopy Growth's Canadian retail operations. So they got rid of the Tokyo Smoke and Tweed locations, and we know that a few other LPs said that was the wrong approach. If you're an LP, you should leave the retail up to retail, like the High Tides and the Fire and Flowers of the world. And then sure enough, Canopy Growth ceased operations there. So they're a little bit behind in terms of that, visualization for that part of their business. The organizational restructuring of certain corporate functions and the closure of the Scarborough, Ontario research facility as a result of the cost reduction initiatives undertaken of fiscal 2023. The company intends to close the Hershey Drive facility in Smith Falls, as I mentioned, and they're going to be cutting 40, which is about 40% impacted immediately. So it's 60%, including 800 positions across the business, and positions impacted by the changes announced today, but 40% are impacted immediately. So 40% of that 60% were let go immediately. Management expects the cost reduction initiatives will reduce the cost of goods sold, COGS, and selling and general administration, SG&A, expenses by a combined 140 to 160 million over the next year, and cost reduction target of 240 to 310 million, inclusive of reductions of announced in April 2022. So they're just under, I think, 600 million in cash. Canopy Growth continues to progress its U.S. strategy as well through the Canopy USA LLC, and is committed to remaining dual listed on the TSX and the NASDAQ. So for those of you that are wondering, they created a holdings company to fast track the U.S., which we'll look at here in a second. Actually, I'll just bring it up. So Canopy Growth looks to speed up entry into the U.S. market, MJ market, with new holding company. And that's going to allow them, basically it's just allowing them to, go against the regulations, and it's just a loophole for them to get into the American market, because we know that they're looking to get into the American market through the acquisition of acreage, but that's only when federally permissible to do so. So once the U.S. once we have reform right from a legalization perspective, and as we know, that's been they've sort of been kicking their feet down there in the south. Here in Canada, our neighbors to the south just unable to get it done there in the political sphere. But we'll see what comes in 2023. I do think that we could get some reform this year, whether it be safe banking, whether it be rescheduling, descheduling. There's lots of talk about potential rescheduling to Schedule 3. from Schedule 1. So that would be a huge momentum shift as well, and a step in the right direction. We'll go through this here. Based on our current revenue run rate and these cost reduction initiatives, management reaffirms its expectation to achieve positive adjusted EBITDA in fiscal year 2024. So not until next year, with the exception of investment in BioSteel. And that's another thing that I wanted to mention as well, is that BioSteel was named the official hydration partner, I've done a video on this, of the National Hockey League and the National Hockey League Players Association. And not only that, they signed a huge deal with Alec Manoah of the Toronto Blue Jays. So that, I think, and if you've ever tried the BioSteel, they're fantastic. I tried the mango peach, I think it was, the other day. It was amazing. And then the cherry lime. They're coming out with a bunch of new flavors. And when they can add CBD to that, right, or if they can add, eventually cannabinoids to that, that's going to be huge. But Canopy must reach profitability to achieve our ambition of long-term North American MJ market leadership. We are transforming our Canadian business to an asset-light model and significantly reducing the overall size of our organization. These changes are difficult but necessary to drive business profitability and growth. This is David Klein, the CEO, and he came from Constellation Brands. And as you know, Constellation Brands, the maker of Corona beer, has the majority stake in Canopy Growth. So I don't think they're going anywhere. I think they're too big to fail at this point. Like I said, I really like their stores in Bickle. I really like their BioSteel ties there as well. Like I said, the debt is a concern for me, but again, with Constellation Brands backing it and having majority stake in there, and like I said, these cost-cutting initiatives that are going to cut down on COGS, are going to cut down on SG&A. I think it's a step in the right direction, and they're steering the ship. They're trying to right the ship and weather this storm, right? If we can pick a few different companies, right? If there's tons out there, right? I own Canopy, full disclosure. It's less than 5% of my portfolio. I was never really sold on their short-term outlook, but long-term, I think that it could be a winner, right? Maybe a top 10 globally in the whole MJ space. And like I said, if we can just pick two or three winners that are going to be here in 5 to 10 years that can weather the storm, that could be life-changing wealth, right? So we'll move on a little bit quicker here. So MJ producer Canopy cutting 800 jobs and closing the flagship Canadian facility. So this is Matt Lamers. He's a pretty bearish publisher for the MJ Biz Daily news outlet, and he just goes through, reiterates a lot. So Canopy promises profit in 2024, another poor quarter. BioSteel and non-THC beverage dipped 4% to $16.4 million international. MJ dropped 54%. Stores in Bickle, the company's popular vaporizer line, fell 20% year over year to $20.2 million. Regulatory failures, obviously, hindering the acreage deal, right? But that is what sparked the fast track into the U.S. with that holdings company. So I think there's a lot of potential here. We just need, and if we ever get U.S. reform, right, and it's able to capitalize on that acreage investment and get into the U.S. market, I mean, the sky's the limit, right? So it's just about weathering the storm until we get there. But moving on a little bit quicker here. So one thing I wanted to mention in regards to the beverages. So they're going to be outsourcing beverages and edibles and vapes and things like that. I wonder if it has anything to do, if it could have anything to do with this. So remember when I did a video on this, the MJ company Can raises $27 million and launches in Canada via Trust partnership. So Trust is the joint venture between Molson Coors and Hexacorp. And it goes on to say here that the Canadian beverages are being produced by Trust Beverage, a joint venture between Canadian MJ producer Hexo and Molson Coors Canada. So I wonder if it's possible that maybe Trust may end up being the de facto producer and manufacturer for this, right? We know Hexo is a manufacturing company, and MJ, it's going to have all these different, they're going to have producers. I have about 14 different MJ positions now. Hexo is my biggest holding, but I do own Canopy Growth as well. Less than 5% of my portfolio, but I've got a mix of Canadian producers, US producers. I've got ETFs. I've got picks and shovels. So I've got the retailers as well. And not only that, like grow generation and things like that actually sell grow devices and whatnot, paraphernalia. This is going to be a potential here. If they're going to be going to a third-party sourcing model, who's going to get that third-party contract, right? So something possible for the beverages may be Trust, right? We know that Tilray's partnered with Hexo to produce those drinks and things like that. And pre-rolls, we already got the Soleil Slims. So if you go over to Power Group, my website, the YouTube channel, and then scroll down, not only are they doing that, they're also doing the Tyson 2.0, so T2.0, and they're doing those under the Readies. And then Tilray's got the new Soleil Slims, which are the Redecan technology as well with Hexo. So it seems like Hexo is going to be the de facto producer and manufacturer so far, and we'll see if Trust can land that deal in partnership with Canopy for the beverages, and then it may even happen with the edibles. It could happen with the vapes as well. Maybe not. I'm just kind of speculating here, but it's definitely not unwarranted, right? Kind of writing is on the wall and very, very possible. But if you haven't seen the canned beverages, I did a product review on those as well. You can just go to my YouTube channel, go to videos, and then type in CANN can, and then that should be the first one that comes up there. But taking a look at CGC, so after the earnings, we started to slide actually leading into those earnings because we had no daily support all the way down right here to about 251, and from that high to the low, we're now down over 30% in about a week. But obviously those earnings, huge miss on EPS, huge miss on revenue, and stock got absolutely destroyed. But on the weekly time frame, no major damage here. We're just looking for a weekly higher low. We have the low, high, higher, low. We're looking for a higher low compared to the 52-week low there at 209. So if we can form this higher low and then get back up towards resistance, it would more than likely be an equilibrium. So we're probably going to see a type of tightening range unless the S&P 500 has any weakness next week, which is entirely possible. We could see weakness on the broader market next week, which would be headwinds and potential more downside potential for MJ stocks, right? Because we know we're at weekly inside bar right now in the S&P 500. We haven't consolidated in about 2 months on the weekly time frame on SPY. So if that were to happen, that could mean more pain for Canopy, right? So this is less than 5% of my portfolio. I may add this 1 or 2 more times if we do dip to new lows. Did add it closer to $2, but if we do dip below $2, I'll be buying, and this is on the NASDAQ, of course, so everything listed in USD. But going to be interesting to see how they climb out of this hole and what transpires over the next few weeks, especially with the broader market due for some weekly consolidation and Canopy near the lows. But if we take a look at the weekly time frame, we are seeing a bear cross of the stochastic potentially in the MACD, so it's not looking good. We're back below the 10-week moving average. And then in terms of the weekly moving averages, you can see here we're just unable to get over that 50 weekly there at 392. But on the daily time frame, there is a little bit of a glimmer of hope. We did have a golden cross back here. Whenever this golden cross occurred, it was in November of 2020, and the price went from about 19, 20 bucks all the way up to about $60. Then we had the death cross with the 50-day above the 200-day moving average. It crossed bearish, and when it's on the daily time frame in the 50-day and the 200 cross with the 50 above the 200, that's called a death cross. Price at time of the death cross was $25, and then we dropped all the way to $2. Now we're seeing another potential golden cross, right? And we're even beaten down even more than we were last time. So we could see a huge move. I know everybody probably thinks that Canopy ain't going to go anywhere anytime soon. We're probably not going to see any price action to the upside, but that indicator alone doesn't mean that it's going to happen right away. If I just bring it up, the last time it happened, it crossed bullish here in November of 2020, and we didn't peak and hit the actual top until February 2021, right? And then everything went in monthly downtrends, and it was just a landslide and a complete bloodbath from there. But again, if we haven't seen those cross yet, it could take multiple months, right? It crossed in November of 2020, and then it peaked in February 2021, right? So it took a few months, several months, for us to really see the price action shoot up. So it could be a similar situation where it takes at least 3, 4, maybe even 5 months before we see some parabolic action and potentially hit weekly overbought territory, maybe even potentially monthly overbought. But I don't think that's going to happen anytime soon. We still got a ton of work to do. We still need to confirm weekly uptrends. We still need to confirm monthly uptrends across the sector to be confident that the bottom is in and that the bear market is over and that we're entering a new potential bull market. But I do think that the broader market could see some short-term bearish, medium-term bullish, and long-term bearish on the broader market. So if we can get this consolidation out of the way on the weekly time frame on the S&P 500, the broader market, and then leading into March with the FOMC rate decision, I think that we could see a potential pause and a favorable reaction and outcome to that Fed interest rate decision. And then we start to see the whole market just go completely parabolic. We have a potential inverse head and shoulders forming on the S&P 500 chart as well. If we form that right shoulder on the inverse head and shoulders, if we start monthly consolidation, and we could see a massive move into the spring. But I do think it's going to be a type of scenario where we see a sell in May and go away scenario, and then leading into the summertime and into the fall is where we're really going to start to see the sell pressure pick up. So I'm banking on a pretty big move here into the spring, and I think that MJ should follow suit as well. But going into there, hopefully you found value in this. If you agree with me, disagree with me, let me know your comments. Let me know what you think about these earnings. Let me know, are you buying, are you selling your position? I'm not telling you to buy, sell, or hold. I'm just telling you what I'm doing, and this is for entertainment purposes only. This is not financial advice as always, but always curious to hear what everybody has to say. I've already been talking to a few people in the community about this and heard lots of mixed emotions and lots of great points on both sides, bullish and bearish. But like I said, I'm not investing any more than I'm willing to lose in Canopy. I'm betting on the long term. I do think that the prospect of the long term is looking good. Based on all of these cost-cutting initiatives and improvements to COGS and SG&A, and like I said, this new holdings company and Canopy USA, that they're going to be able to fast-track the US until we wait for reform and they're potentially able to capitalize on acreage. But going to end it there, if you could smash like, I would appreciate it on your way out. Share the video with anybody that might find value. I would appreciate that as well. And hope you have a great rest of your weekend, and we'll see you next week on another video. Take care.